Welcome to the Capital News. I am your host, Alex Karitis. Today is Friday, May 15th, 2020. Thank you so much for joining me. Title of today's podcast, No Consumer, No Sale. And this is on the back of the release of the retail report that came out. We're also going to discuss some other economic figures, market performance, some bankruptcies that just came out this evening, the $3 trillion monstrosity known as the HEROES Act, the Nancy Pelosi dream come true if she can get it. It did pass the House. Will it pass the Senate? We'll talk about that. The Federal Reserve released their financial stability report, or maybe it should be financial instability report. We're going to discuss that briefly. A little bit of interesting developments when it comes to the CARES Act, some tax provisions and how some corporations might be benefiting before they abandon ship. Operation Warp Speed. This is a new one from the White House today in regards to COVID-19 and vaccinations. And then sort of the revealing of the Space Force, the new branch of the military, the flag ceremony, the flag revealed today. And then lastly, the blame game is heating up, and this is in direct relation to the United States and China. So a busy Friday. So a lot could take place this weekend. First to market performance, the Dow, the S&P 500, the NASDAQ, and the Russell 2000 all closed up in the green despite the terrible economic news that we're going to discuss here shortly. The Dow was up 0.25%, the S&P was up 0.4%, the NASDAQ 100 was up 0.6%. I do believe the Russell 2000 closed up over 1% for the day. Somewhat of a mixed bag over in Europe across the pond. The UK gained 1%. The Germans were up 1.25%. France up 0.25%. Italy and Spain both down for the day. On the commodities front, another strong day for oil. WTI trading at $29.43 per barrel. Brent is trading at $32.78 per barrel. Natural gas, that's still to the downside, $1.65 per million British thermal units. Strong day for both gold and silver, which we discussed yesterday, was looking good. We'll continue to see if this trend, this strong trend as of the past couple of days, continues. Again, nothing goes straight up, nothing goes straight down, but definitely worth watching. Gold trading at $1,744 an ounce. Silver at $16.62 an ounce. And again, this is from Trading Economics. Although when you look at Yahoo Finance, they have silver settling slightly north of $17. So I'm not sure why the discrepancy. They're usually a lot closer. But nonetheless, a big day for silver, gaining 4.75% for the day. Again, trading at $16.61. Uncle Sam's 10-year Treasury note yielding 0.64%. U.S. retail sales plunge at record pace. Retail sales in the U.S. sank 16.4% from a month earlier in April of this year. Worse than forecasts of a 12% decline. It is the sharpest decrease in retail sales on record due to the coronavirus pandemic, which forced Americans to stay at home and many businesses to close. Biggest declines were seen in sales of clothing and accessories, electronics and appliances, and furniture. And it wasn't a good day for autos either. Sales at gasoline stations also went down after oil prices turned negative for the first time since April. Now, this is no surprise, U.S. retail sales plunging and that it's a record pace. That's not surprising either. What is surprising, I guess, of course, nobody really knows. This is uncharted territory. So that's why you have quite a surprise. 16.4% decline. Market expectations were for 12%. That's a miss by over 30%. That's huge. So if you look at this and you understand on a breakdown of gross domestic product, GDP here in the United States, typically speaking, consumption is responsible for about 70% of GDP. 70%. And I do believe last year it was almost 90%. That's how much this economy was relying on consumption. Of course, this is stuff that most people can't afford, shouldn't be purchasing, aren't going to use. This is living beyond your means. This is all of this debt spending that everybody thinks is a panacea. They think it's good for the government to do it. They think it's good for corporations to do it. They think it's great for the household to do it. It is not. We are witnessing this. We were witnessing the slowdown before COVID-19. This pandemic is just a very, very timely and convenient excuse for politicians, central bankers, and other policymakers to point the finger and lay the blame all on this pandemic. Those of you who have been with this podcast since we've been online since last February knows this. Knows that the global economy, and that includes the United States of America, was in decline. It doesn't mean it was as rapid as it is now, but it was slowing down. This just exacerbated the problem. This just hastened everything. The day of reckoning was going to happen. No ifs, ands, or buts about it. The piper need paid, and he's getting paid, and it's a painful process, and it's going to be a very long, painful process because we have so much debt out there, and we know what debt is. It brings future consumption and production forward to today. We have stolen so much wealth from the future. You cannot expect to just roll over, V-shaped recovery, pent-up demand. We're going to go right back to the way things were. Presto. It's not going to happen, nor in my opinion should it, because that system, living well beyond your means, was unsustainable. It is unsustainable. You cannot live paycheck to paycheck and call this the greatest country or the greatest economy ever. You cannot not have $400 in the event of an emergency and claim that this is the greatest economy ever. You just can't do it. You can't say, well, they're living paycheck to paycheck, don't have $400, using credit cards to make ends meet, and then, yes, this is also the greatest economy that ever was. No, no, and no again. This is very simple stuff. So when you have GDP, and you have the consumer responsible for about 70% of GDP, and you now have real data that came out, negative 16.4%. Again, market expectations were for 12. Well, now all of these economists are going to have to go back to the drawing board and correct some of their forecasts for GDP for the second quarter of this year. And a lot of those forecasts were already well into the double digits. And I'm talking 20, 30, some even have it at 40% decline on a quarterly basis for the second quarter of this year. Well, I would have to assume with this number coming out that those forecasts are going to get a little bit gloomier, and I would not be surprised. On the retail front, this evening, JC Penney files for bankruptcy. No surprise. This is a continuation. This is the tip of the iceberg. The very tip of the iceberg. This stuff is just getting started. We talked about this the other day, the Fed's BS, negative rates coming, a liquidity crisis versus a solvency crisis. Yes, the Federal Reserve can help with liquidity. They cannot help with solvency. You need a consumer. You need sales. You also need production. Industrial production is down 11.2% for the month of April, the largest decline since they've been keeping records. Industrial production declined for the month of April, down 11.2%, the largest decline since they've been keeping records. On a yearly basis, the year-over-year percentage change is a decline of 15%, negative 15% year-over-year change in industrial production. We have not seen this type of decline year-over-year since the depths of the Great Depression. If you want to get another comparison, you have to go all the way back to World War II and really the end of World War II because we won. We didn't have to continue producing planes, the ammunition, tanks, all that stuff. So you saw a huge drop-off then, and then obviously during the depths of the Great Depression. So this tells you the type of economic environment that we are in. Those are your comparisons. The depths of a great financial crisis which was supposed to be a once-in-a-lifetime thing, and here we are, just a little over a decade later, right into another one. And this is going to be worse. And again, it's all going to be blamed on this coronavirus. And there's no question that there is some of that to go around. No question. But nobody's going to take any responsibility for the massive amount in the increase in the debt loads across the entire planet, not just here in the United States with the national debt north of $25 trillion. And by the end of this fiscal year, which will end at the end of September, we're going to be $27 trillion, if not more, because we already know the projections for the deficit is going to be $4 trillion. Well, that's another $1.5 trillion, $2 trillion. And if this monstrosity of the HEROES Act actually passes in the Senate, which we don't think it's going to, because now all of a sudden everything's back to being partisan. Everybody was happy, joy before, right? Couldn't get the money out fast enough. Spend it like it's going out of style, because it is. And now all of a sudden, nope, okay, draw it in the line. And I'm glad they are. I don't want any bailouts. But I mean, what the hell? 3 trillion here, 3 trillion there, 20 trillion, who cares? Right? It doesn't matter. Modern monetary theory, we're evidently adopting it. So why draw the line in the sand now? So the partisanship is back. The Democrats want to push this HEROES Act. And of course, I love the names these idiots come up with, because they always come up with something that, you know, if you vote against it, or you're against heroes? How can you be against heroes? It's like the Patriot Act, which is one of the most unpatriotic pieces of legislation that has ever been signed into existence. Ever. Not just in this country, ever. Oh, you're against the Patriot Act? Are you unpatriotic? This is stupid, right? I mean, this is for the simpletons, but guess what? It passes. This allows the cheap shots to come out there. You voted against the Patriot Act. You must be unpatriotic. You voted against the HEROES Act. You must be against the heroes who are trying to save us in this pandemic, in these trying times in which we live. How dare you? How callous. Those greedy Republicans, how dare they vote against this? No child left behind. You voted against that? You want children to be left behind, do you? Is that what you want? A race to the top? You voted against that too? You want them to be at the bottom? That's where they are. Again, it's almost a law of nature when it comes to government. Whatever they name their bill, it's the opposite that takes place. The Affordable Care Act? I don't think so. Maybe the Unaffordable Care Act. That makes more sense. Unbelievable. But the $3 trillion monstrosity passed the House, again, on party lines. It'll go to the Senate. It'll get rejected. I don't think the president would sign this one into law anyway. Now, this doesn't mean that they're not going to come to some sort of compromise with something. The president did say today in the Oval Office that he was going to Camp David this weekend and will be meeting with several people from Capitol Hill. So who knows what's going to be discussed, but I imagine it will be some sort of phase 4, 5, 6 in stimulus, whether that's going to be the bailout the states, whether that's going to be for infrastructure, some combination thereof, to put on some sort of payroll tax holiday through the end of this year. Who knows what they're going to come up with next, but you're going to be paying for it. Just understand that. Make no mistake about that 100%. You're going to be paying for it. No matter how they spin it, no matter how good they make it sound, you're going to be paying for it. Okay? We already went through the numbers. $3 trillion that they already borrowed, they're going to be borrowing for the second quarter. You divide that by the number of jobs that are lost, you're coming about 89,000 per job. Right? Most of these jobs are under 40,000. 89,000. Give them the 89,000. No, I couldn't do that. Nor should they. But this is the nonsense. This is simple stuff. This isn't any crazy regression, econometric stuff. This is basic arithmetic. Adding, subtracting, multiplying, and dividing. And that's what we outline in our book, The Cynic's Guide to Investing. We don't need to manipulate any type of data to suit our thesis, to suit our story. The idiots in government and central banks do it all for us. All we have to do is go to the sources of the data and show it to you, and then do some math. That's all it is, which is also one of the rules of the cynic. For God's sake, know a little math. Basic stuff. But with No Child Left Behind and Race to the Top, it's getting a lot harder for these kids to do basic math. And who's in charge of the educational system? That's right, the government is. You see the picture? Are you waking up to these ugly truths? I hope you are. I really hope you are. And then you look at industrial production, just from the index standpoint, and it peaked around, let's see where we're at here, November of 2018-ish. Yeah, that's about it. 110. Yeah, that's what I'm going to say. And now that was peaking there around 109, 110 on that index, and now we're sitting at 92.5. That's a huge decline, by the way. You can look this up, Federal Reserve Economic Data, Fred, where we always go to. And again, we weren't at these levels on this index since the depths of the financial crisis, the great financial crisis. So just another one. The hits just keep on coming. Wall Street just continues to shrug it off. And of course, in light of all of this horrendous data, you have the president come out today with his team on the health side with Operation Warp Speed to promise that there is going to be some type of vaccine to combat COVID-19 by the end of this year. By the end of this year. A couple months ago, we've been told by everybody and their mother 12 months to 18 months at its earliest. This would have been back in February, March, when we really started to wake up to the fact that this was going to turn into something here in this country. Well, that's going to be 9 months, okay? Not 12, not 18, all right? And I don't trust this government as far as I can throw it. Neither should you. I am not going to trust this vaccine at all. At all. Now, you're going to make up your own decision, and that's what you're supposed to do. But I am not going to trust this at all. And now, for some reason, the president is saying that he's going to have the military administer it. What does that mean? Is this some sort of police state in the making? Are we going to have checkpoints, or are they going to come door to door to make sure that everybody is vaccinated? Is that what that means? Because that's the vision that comes to my mind. I hope I am wrong about that. But is that what we're going to have to do? Is this going to be some sort of forced vaccination? It better not be. I can tell you that right now. I'm going to be writing a lot of letters if that takes place. I mean, that'll be it. That'll be the straw that finally breaks the camel's back in this country, if not something sooner than that. And we talk about all of the global protests here all of the time, that they are not transitory, and I hope you're understanding that, which is why we've been saying that for months, that these global protests are not transitory, but rather history in the making, because they are. They've taken a little break. They've had an intermission. Now they're going to come back full force. Because if things were bad before COVID-19, and they were, well, they're even worse now. And if you had a hard time feeding your children then, it's going to get even more difficult now. And we're still in the early throes of a lot of the supply chain disruptions when it comes to food. Because you have obviously different climates, different harvesting seasons. Here in the United States, we are an agricultural powerhouse, even though we have an enormous amount of farm bankruptcies that has been taking place over the past couple of years. Despite the fantastic Phase 1 trade deal, of course it isn't fantastic, and of course that's pretty much, it's virtually non-existent, and now it's pretty much falling apart. Or you could say there never was one, so there wasn't anything to fall apart, because that's the blame game. That's the blame game, and it is heating up. The president, Peter Navarro, trade economic advisor, coming out, playing the bad cop, Larry Kudlow coming, oh no, everything's fine, everything's good. We're all good. So it's the good cop, bad cop game. What's going to be taken away? Some actions were undertaken also by the Trump administration, targeting some semiconductors in relation to Huawei, the Chinese telecom company that is a big mover when it comes to 5G technology. So this, too, is just the tip of the iceberg. This is a presidential election. This is low-hanging fruit. Politicians love to blame somebody else. And a lot of people are not happy with China, and rightly so. So, nobody is going to ever take responsibility for anything. The truth is not an option, and if it is, we don't hear about it. So, that's gone. So now it's the blame game. That's what's going to take place. The president is very good at the blame game. A lot of politicians are good at the blame game. That's how they make it. Telling the truth doesn't get people too far in this world, unfortunately. But if we can lie, we can distort, we can exaggerate, we can tell people what they want to hear, we can lie, we can blame others, boom, presto, we're going to get elected. You understand why that leads to problems? $25 trillion in debt, 100 unfunded liabilities in this country, etc., etc., etc. Operation Warp Speed to get a vaccine here by the end of this year. I'm hesitant. And who's going to get the vaccines? Who's going to do what with it? I don't know, but I guess time will tell. And of course, a lot of this was thrown out there to get the markets back up because they weren't trading in the green all day, of course, because they had some terrible news, worse than expectations. Come out, pump the market, going to get a thing, we're going to reopen, everything's going to be fine, back to normal, yada, yada, yada. Computers, the algorithmic trading, they loved it, closed in the green as we stated. But I also think one of the reasons why we're continuing to see these strong moves in the precious metal space, especially with gold and silver, obviously, is because of what's taking place, obviously, with central bankers, federal governments, but also the geopolitical risks. And I hope, really, that investors start waking up to this reality. And I think they're starting to. Now, you're going to always see the smart money, if you will, the big money move first, because they're the ones that pay better attention to these types of things. Doesn't mean they're right all the time, but that's typically something to pay attention to, is where the big money is moving into. And we've had for quite a while a lot of big money people talking about gold as a store of value, because it is, and as a good investment in these times, because it is, in my opinion, as well. And we've been discussing that here for quite a while. Again, I don't give investment advice. You have to do your own research. But I tell you what I think, give you the information, some sources to find it, go do your thing. It is a hedge. It is an investment. Inflation, deflation, political, economic, financial, insecurity and uncertainty, geopolitical risks out the wazoo. Just pay attention to it. Gold continues to move on this information. And it's not good information. And that should tell you something. Now, with the CARES Act, little caveat, obviously, because nobody reads these damn things, some tax provisions were, of course, thrown in this to help out corporate America. And, of course, it can be used for smaller businesses, too, I would imagine. But never let a crisis go to waste. So you have companies that are filing bankruptcy. But before they do so, they are taking advantage of some of these tax provisions that were thrown into the CARES Act, which was one of the first phases that the government has thrown out there when it comes to these quote-unquote stimulus packages, right? CARES. Got to care about everybody. You don't care about people, right? That's how they name them. So these tax provisions that would allow a company to keep more cash on hand, because the government's basically saying, okay, these are like carry loss provisions. You're going to lose money. Don't worry about it. Keep the cash on your books, and we'll worry about this moving forward. Well, that's music to these people's ears. We're going to file bankruptcy, but before we do, we're going to take advantage of these tax provisions. We're going to take that cash, and we're going to pay ourselves handsomely. And that's what some executives are starting to do. That's what they're starting to do right before they file for bankruptcy. Hey, who are they working for? Who are they working for? You getting millions? No, you're getting $1,200 if you're lucky. You might not even be getting unemployment insurance yet because of all of the backlogs that are taking place. I mean, but these guys get it. Drop of a hat, blink of an eye, flip of a switch. Do you understand what's going on here? Federal Reserve's Financial Stability Report. They report this, I think, twice a year. I have not read it in its entirety. I caught some clips of it. I will do my best to read this report because I typically do. And what I found was reminiscent of a report that I read in 2018 prior to that massive stock market downturn in the fourth quarter of 2018. And the language is reminiscent in the following, that in 2018, the Federal Reserve was starting to warn about financial instability and concerns, especially with regards to corporate debt and corporate leverage. Well, lo and behold, there's even more now. So wouldn't you think that they would say that that's another concern? And they did. And they did. And I thought the timing of it was quite interesting because that report came out shortly before the fourth quarter. And I remember reading it and saying, look, there might be, a massive sell-off or some type of thing. They might be warning us here. But how many people actually go and read these types of reports? Not many. Not many. But if you go and you look for these things, you can find them. And maybe they're sort of throwing you a bone saying something's coming, and and that's exactly what took place. Exactly what took place. And then again, you had the hissy fit from Wall Street, you had the hissy fit from the president, and that all reversed. We've gone through that a million times. But now, once again, they are warning those who are paying attention that there are big risks in the system. I mean, this is obvious to anybody who's paying attention. But for the Fed to actually admit it and put it in writing once again is telling, and it might be a little bit of CYA covering their rear end. But it makes sense. It makes sense. There's a lot of uncertainty. Asset prices could decline significantly. Well, no duh. No duh. But that's a lot different than all of the cheerleading that you get to hear most of the time. Everything's fine. Because back in 2018, right? Everything's fine. This is the greatest economy ever. We're going to have the balance sheet on autopilot. We're going to get to normalization. Well, if you're afraid that there's massive insecurities, that there's instability within the market, concerns within corporate debt, well then, why would you say everything's so great, right? So these are just the things that you have to pay attention to. The Fed's financial stability report, you can obviously find it from the Federal Reserve. Take the time to read it. Might be a little dry to some of you who don't really like this stuff, but to me, I enjoy reading most of these things. And they do tell a picture, and they are filled with a lot of good data, and a lot of the same data that we discuss here all the time. So I'm going to be interested in finding out what's really in this report, because again, I have not read it in its entirety, but it's filled with a lot of good data, and I'm interested to see what it tells, because I'll pick up other things than what they just tell us from it too. So a busy week. Markets shrugged off the data. Although when you look at the broader market, especially the S&P 500, it is in a consolidated period. It's basically been range-bound for the past month. But despite when you get the bad news, we've seen the rallies, especially over the past couple of days. Horrendous news. Horrendous news. 36.5 million Americans losing their jobs over the past month and a half, 2 months. Terrible retail report, the worst ever. Some of the worst numbers in industrial production. Markets just keep moving. Bankruptcies. Again, JC Penney tonight. We've talked about Nordstrom's, Neiman Marcus. Gap has some problems. J. Crew filed for bankruptcy as well. Just the tip of the iceberg. And if you have any type of reopening in the economy, we all know it's partial. We know the changes that have to be made, at least temporarily, to many establishments, especially restaurants. Table reduction, bar stool reduction, death by 1,000 cuts. Can you survive making 80% of what you used to make month after month? 60%, 70%? What's the number? How long can you survive? Will there be a second wave? Because you also have cities and some states continuing to extend their deadlines as to when things are going to be reopened. I mean, this is getting ridiculous. And I understand the health concerns, and I understand the overwhelming sensation and the problems that can occur in the health system. We've discussed that here for months. But what's going on now? I mean, it's just getting a little out of hand, in my opinion. And now with the vaccine that's going to be rushed, that scares me, that frightens me, because this government isn't good at much of anything. Rushing a vaccine and saying it's going to work, I don't think so. I don't think so. So a lot to be paying attention to. The blame game. No consumer, no sell is the topic and the title of today's podcast, because that's what drives this economy. It's consumption. And there is no consumer. No consumer, no sale. It is Friday. Enjoy your weekend. I'm sure we're going to have a very busy week. next week as well, because all of this stuff has to play out. It all has to play out, and it's going to unfold over the coming months and over the coming years, because this is structural. This is structural. It is not going to go away as fast as it came. This country, the people in this country, in this entire world, need to wake up to what's going on. It is a global financial coup d'etat. But especially here in the United States, with the amount of money printing, deficit, government spending that we are going through. And you think you're lucky because you got a check for $1,200. Wait till you got to pay for everything on the other side of this. We'll see how far that $1,200 gets you. Enjoy your weekend, ladies and gentlemen. Thank you so much for joining me. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. I'll catch you back here next week. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.